We have G. Shivkumar, who's the Executive Director and CFO at the company, joining us on the show. Thanks a lot, Mr. Shivkumar. Always a pleasure speaking with you. And that really is the first question, because the last time we spoke to you, you said that rates had seen an abnormal rise, and that was because of the Russia-Ukraine war. Post that, a lot of things are coming to terms with this situation, and rates are reflecting that as well. Have we seen some sort of normalization of those rates? How is the international situation like right now?
Yeah, so tanker rates are, first of all, thank you, Mangalam, for having me. Tanker rates are very strong still. In fact, crude tanker rates have become stronger in the last month or so. Again, mainly driven by the war. It's also now the crude tanker, some of the drivers of the crude tanker rates are pretty high exports out of the US. They've released the crude from the SPRs, and that's long ton mile demand. So, and therefore, crude tankers are doing very well for the last month and a half. The larger crude tankers, the smaller crude tankers were doing well for the since April, May, and now you've got the larger ships, the VLCCs, also joining in the party. On the dry bulk side, the demand pressures are showing. The trade is actually down probably 1 to 2% this year. We had the market kept up by congestion and that was tying up ships, basically COVID-related disruptions. We have seen congestion dropping by 5% in the last month and a half, and as a result of which the big ships have dropped a lot. So Capesize bulk carriers have dropped now. The spot index is now at about $3,000 a day versus the high in the last 12 months was, I think, $80,000 a day in October last year. And it probably was 30,000 less than 2 months, about 2 months ago.
So you're saying the spot prices have fallen from 80,000 to 3,000?
Yeah, 80,000 was the peak in October last year.
Okay.
It was about 30,000 in end of June for Capesizes. Now these are the big size ships, which are really affected by steel and coal demand. The smaller ships are a little less affected. Of course, they've dropped as well. 30,000 has become about between 12 and 20,000. But the dry bulk market is feeling the effect of poor demand.
That's quite a steep fall that we've seen. So what does this mean for your own business? I mean, if the dry bulk market continues to be under pressure, you in any case have barely seen a 5% revenue growth in the quarter gone by. You think there could be a degrowth in the subsequent quarters?
No, I think not to, again, make forward statements, but I think the crude tanker rates and the product tanker strength, which has continued. And remember that we got product tanker strength for 2 months of the last quarter. Currently, we've had product tanker strength through the quarter, and rates which are fixed up to now will take us through to end of September. So I think the tanker rates compensate for the dry bulk drop.
Right. So, what we're trying to get at is that what does it mean for GE Shipping's business? I mean, in FY22, you did revenues of almost 3,500 crores. That time you had said that for your FY23, you had about 750 crores of revenue visibility for shipping and almost 670 crores or 700 crores coming in for offshore as well. Put both of them together, that is around 1,500 crores. So that's half your annual revenue, which was for sure. Now, now as we speak, towards the end of the first half of this year, where does your outlook for this year stand?
So again, no forward-looking statements. We don't know how the market's going to play out. And this is a very uncertain market. As you mentioned, demand is actually lower on the products, on the oil consumption side. It's not yet come back even to 2019 levels, pre-COVID levels. Despite that, rates are really strong because of these disruptions which are going on. And, these disruptions can really unwind, not easily, but they could unwind anytime. So it's tough to make a call for this. All we can say is that, the first 6 months of this year for tankers are much, much stronger than the first 6 months of last year. And I'm talking of 2 to 3x in terms of rates. We were earning $10,000 a day on average in the first in the first half of last financial year. This year, it's well in excess of 20,000, probably in excess of 25,000 on average.
Okay. Any investment plans that you have in your shipping business?
We'd like to invest. Unfortunately, because the market is so hot, asset prices are really high. We are value investors, and we are patient capital. We'll wait for the right opportunity at the right prices. We've sold a couple of older ships, and so we've released cash. We are now very low net debt. So we are waiting for opportunities. Unfortunately, none so far.
That's typical of GE Shipping, right? You'll wait out, and when the going is extremely tough for everyone else, you'll go ahead and lap up a lot of assets at low prices. Interesting that you have sold a couple of old ships as well. If you could tell us the kind of cash that you've raised from that. And, the other thing is that we're looking at your crude prices, as in currently, as we speak, crude prices are around that $93, $94 per barrel mark. We also wanted to understand, how does that impact your business on a net basis? Because on the one hand, bunker fuel prices, are impacted. So that is a cost item. And on the other, you have demand for crude liners increasing or decreasing depending on the way crude prices move. So that was something that I wanted to understand.
Yeah, so the bunker cost is typically a pass-through. It's priced into the market. And if the market is strong, the customer takes that. If the shipping market is strong, the customer takes that cost increase. If the market is weak, the ship owner takes the impact. It helps the offshore business that oil prices are high. And one thing which has happened recently is that when the Brent WTI spread went high, it meant that there was more demand for exports of US crude, and that helped to boost VLCC demand and therefore VLCC rates. So it's not so much the price as the supply of crude. If there's a lot of crude being supplied, it's good for our business, because if it is supplied, it will go onto a ship. And if it goes onto a ship, that means more demand for ships. So the worry about the high price of oil is if there is a demand recession for oil itself, which means lower demand for ships.
Right. And you said that.
On the flip side, drawdown of inventories in the last 6 to 12 months is a really positive factor, because I think crude inventories, especially in the US, have dropped to very low levels.
Right. And what was the cash you said you raised from selling these ships? And as a result of that, what's the debt on your books now?
It's less than 50 million, not a huge amount.
Okay.
We are sitting on $400+ million. This is less than 50 million, but on the margin, it helps.
Okay.
Okay. All right. Mr. Shivakumar, we'll leave it at that. Thanks a lot for joining in and giving us an update on the business. That's GE Shipping for you. For the market itself, it's still not too bad, really. I mean, it's absolutely quiet, but all three indices have now moved into the green. The mid-cap index is up about 100 odd points. Let's slip into a quick break. On the other side, I'll give you an interesting analysis of the August auto sales numbers and the big trends that we've identified in this space.